Hey traders, this is Ron Haid at Market Tamer. Happy Monday. Hope you guys had a great weekend and your week is off to a great start as well. Nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involved risk and specific financial issues can always be addressed by your financial advisor. We'll lead out here with the Qs. They gained a whole 3 cents. No change since yesterday's commentary. And here's the diamonds. They lost 26 cents. Bulls still have the edge on the daily and the weekly charts. Next, let's go into Goldman Sachs, otherwise known as government Sachs, the vampire squid, whatever kind of slang that gets used for these guys. They were down 3.82%. Couldn't happen to a nicer bank. But it could not get above the 200-day on Friday. They became lower. If I zoom in, you'll see we're still above the red line, which is the 20-day EMA. If I was trading Goldman Sachs, where I'd want to keep an eye on it is this 190 area. Right in here. We get below there, or you could actually say maybe 189, 188, basically 190, this area. That's what opens the door to a gap fill, and then all the way back down here as well, technically. So I'd probably set alerts if it were me around that 190 area. And an XLF, a little interesting. We had a nice gap up on Friday due to JP Morgan's report. Today, I mean, if you look at Friday, we closed at 27.14. We opened at 27.15. Got as high as 27.16. That counts by a penny as bearish engulfing. Now, volume wasn't huge, and we can't get too ahead of ourselves here, but if we would gap lower, let's say tomorrow, it probably says there's a short-term top in here unless something major changes. So just keep an eye on the banking ETF. I got questions about NVDA. Was down over $5 today, about 2.79%. It came right into the red line, the 20-day EMA. Ever since we had that reversal that I talked about in the middle of March, it's been 160 pretty much straight up into about 190. There was just barely a little dip here. Well, now we're getting to the 20-day. If we would close below that on an end-of-day basis, that would be my marker, my line in the sand to say the bullish swing trade would now be over. Here's EWW, something we haven't talked about in a while. This is Mexico. We broke out on the 5th of this month. I zoom in. There's the break. And now we're back testing the 200-day moving average in purple. If we fall below the 200-day in purple, this goes back into a choppy range. If we hold the 200-day in bounce, that would be a bullish back test on the breakout for EWW. And here's EWG Germany. 2 straight days above its 200-day moving average. It's been a pretty much a long, in terms of time, decline from around 32 down in 25 in the middle of December there into December, and then we're starting to rally. We're putting in higher highs or putting in higher lows, but it now got above an institutional moving average, something it hasn't done since May, almost a full year ago. And if you look really closely, once we got below the 200, we could not get back above it. The 200 in purple and the 50 in orange, both institutional moving averages acted as resistance at that point, pushed us lower, and we never got above the 200-day again. So as an example, if I was bearish or short the German index, EWG, seeing back-to-back days above it, I know it's not on the best volume, but it's still above it. That would give me pause if I was still bearish right now, short-term on EWG. And then last but not least, we'll take a look at gold. There really wasn't a whole lot going on today in the market. Starting tomorrow, though, there will be a lot more earnings reports coming in. But here's gold. I saw it was down today around 121. It held. The low was 121.09. That's where I would want alerts. Below there, that's where the breakdown technically starts. 200-day at 118, and then back down towards those lows in November. Here's SLV. It ended up closing positive on the day, but it's still setting lower lows, lower highs. And then GDX, George Delta X-Ray, doing a lot of consolidation up here. The fact that gold and silver themselves are moving higher, GDX really is going to have some trouble too. Remember, my favorite time to be bullish on GLD, December, January, February. That's the bullish window, 6 years in a row from a seasonality perspective. We're out of that window now, so I'm just not interested at this point. So that's it. Nice short video. I'll be back with you tomorrow. Have a wonderful rest of the day.